Good afternoon, everyone, and welcome to today's webcast brought to you by Compliance Week. I'm Aisha Maharaj, Digital Content Editor, and I'll be hosting today's webcast. Today, we're going to be talking about best practice internal controls for reducing fraud and corruption risk. But before we hear from our guests, let me quickly go over the agenda for this afternoon. We're scheduled to go for 1 hour. I'm going to give a brief introduction, and then we'll jump right into the presentation sponsored by BDO and The Network. That presentation will be followed by a question and answer session. Your questions will be kept confidential and anonymous. So please, don't be shy. You can ask your questions at any time using the Ask a Question function on the left-hand side of your screen. And I'll post them to our guests at the end of their presentation. After the Q&A, I'll wrap up the webcast. This webcast will also offer CPE credits for all attendees. Please disable your pop-up blockers in order to access the exam. To obtain your CPE credit, wait until the webcast is completely over and I sign off. At that point, the final examination will be presented automatically in a separate window. Again, please ensure your pop-up blockers are disabled. If you have trouble viewing the CPE test or receiving the CPE certificate, please send an email to info@complianceweek.com to request a copy. I'll repeat these instructions at the end of the webcast, so if you missed anything, stay tuned. A few other administrative details: at any time during the presentation, listeners can download the slides from the drop-down menu on the left-hand side of your screen. You can also hit the View Slide Full Screen button at the bottom of your screen if you wish to increase the slide size. And lastly, a Help button is located in the upper right-hand corner of your screen for assistance. Today's webcast is part of a series that Compliance Week launched a few years ago. We hold these webcasts just about every week, usually on Thursdays, and our guests have been Chief Compliance and Governance Officers at leading public companies and experts on various compliance, regulatory, governance, and risk topics. I'm not going to read the upcoming schedule, but you can certainly visit www.complianceweek.com for details or to register. In addition, please visit conferences.complianceweek.com to learn more about next week's 2015 annual conference held in Washington, D.C. on May 18th to the 20th. So let's get to our program. Please welcome Michelle Nichols, Senior Program Consultant at The Network. Michelle provides program consulting services for The Network's training and communication solutions. She has been helping companies create and maintain effective global ethics and compliance programs for more than 15 years. Michelle has spoken in the U.S. regarding best practices for delivering successful global compliance programs, and she has formerly managed risk management and corporate ethics and compliance for a global chemical manufacturer. Also joining us today is Stephanie Giamotto, Consulting Partner at BDO. Stephanie leads the firm's Forensic Technology Services practice and is a member of BDO's Board of Directors with 20 years of experience in accounting, information technology, and criminology. She has worked with organizations and their counsel on many financial frauds, garnering significant media attention, and has led teams to develop data-driven solutions to achieve litigation or investigative objectives. And Jeff Harfinet, Consulting Managing Director at BDO. Jeff leads BDO's Consulting Texas practice for global forensics and with more than 25 years of forensic accounting experience. Jeff has managed teams of professionals on some of the most high-profile investigations in U.S. history, including Typo, Enron, and AIG. He conducts fraud-related investigations involving numerous issues, including alleged violations of global anti-corruption statutes, including the FCPA and UK Bribery Act, among many others. We're glad to have you all here. Thank you for joining us. Jeff, why don't you get us started?
Well, thank you very much, everyone, for joining us today. Quickly, just going over the agenda, we're going to spend just a little bit of time talking about some fraud-related trends to provide some context for the conversation that's going to follow. But the majority of our presentation is going to focus on assessing fraud risk, data analytics and visualization, and monitoring. And these are best practices in the area of internal controls. So in terms of what's happening in the marketplace, people on this call, I'm sure, are no stranger to these types of headlines. We get hit with them every day. A couple of interesting things that we see, and I'm sure that you are somewhat aware of. The amount of government resources being allocated for the SEC and DOJ, FBI are increasing. So this is clearly something fraud is something that's in the purview of the government, and they are going after it aggressively. And speaking of aggressive investigation techniques, the government is starting to employ certain techniques that used to be seen just in the white-collar space and organized crime, sting operations, wiretaps, etc. We're also seeing prosecution of individuals and executives for people who are running afoul of anti-corruption regulations. And we're seeing jail terms of upwards of 6 to 7 years, and that's in federal. So when you get 6 to 7 years in federal, that's pretty much the amount of time you do. Much more global cooperation amongst government agencies. So an issue that arises in Western Europe will quickly get reported to the appropriate authorities here in the United States. Government is giving leniency for strong compliance programs, and one of the things that we're going to touch on today is how these particular types of forensic tools can help you with your compliance programs. And lastly, the issue of whistleblowers. Dodd-Frank made it clear that your employees can now run to the SEC or DOJ and receive a significant bounty. So this really puts companies in a tough position with regard to some of their employees. Some in-house trends. You can see that with regard to where the involvement of the board of directors and executive management is, with regard to how these issues are getting reported up, you can see that about 30% or so are getting reported directly to the board. A much higher percentage are reporting to the CEO and to the CEO through the general counsel. We are not big fans of this type of reporting structure to the CEO. In fact, we just completed a channel stuffing investigation, and the CEO was the key driver behind the investigation. So, we believe best practices is, reporting directly to the board. As far as resources, and this is something we hear all the time in our practice, compliance professionals, internal auditors, their responsibilities continue to grow at an ever-increasing pace, yet their headcounts don't keep up with the responsibilities in a commensurate fashion. So you can see that I find it interesting that 65% of those surveyed believe staffing constraints are the biggest obstacles to their ability to detect or mitigate risk. And we believe that is absolutely the case. So these types of forensic tools that we're going to be talking about today really help professionals, in-house professionals, do more with less. And we're going to talk about how those tools will help you in that role. With regard to risk assessment and monitoring, this is a key area of focus for boards today. I just came from a National Association of Corporate Directors meeting earlier this week, and this was the key area that was being discussed, was how boards need to get more involved in the strategic process of managing risk. And I'm not going to go through all of these issues. You can read them yourselves, but the bottom one says that 74% of companies use data analytics when investigating fraud or bribery. I would say that these are also very useful, not just in the investigation phase, but in the proactive compliance and testing phase. So as we talk about these tools, please keep in mind that these are not just investigatory, but they also are very good proactive tools. And lastly, in terms of technology, I think it's safe to say that everyone knows that the amount of data that's getting produced is just on an ever-increasing glide path, and individuals just don't have the capacity to look at all of the data and see the trends that are emerging, especially the anomalous trends. And one of the real benefits of these types of tools is that it can detect fraud and corruption sooner. You see 82% believe, those surveyed believe that, and this is a key issue. We're looking for the toxic employee, the employee who does not care what the tone at the top is, who knows their way around the control environment, and who may be colluding with someone within the company. So these tools are really very useful in helping to identify these toxic employees and eliminate their schemes early on in their infancy. So early detection here is really critical. So with regards to best practices and internal controls, assessing fraud risk is critical because you've got to match the analytics that you're going to be using to the risks that are unique to your company. So if you are a company that operates internationally, clearly you have anti-corruption risk. So that will factor into your risk assessment and how you might use these tools, especially with regard to the books and records provisions. But these tools also can be used, to identify weaknesses in the procurement process. And again, depending if you're a centralized versus decentralized operation in accounting, you would use these tools accordingly. Some other type of risk issues involve the competitive landscape. If your operations, let's say in South America, if you're competing against companies that are known bribe payers or are from countries where bribery is accepted, this is where you need to be pointing these tools, because if you're winning business in those markets, the question becomes, how are you competing effectively with known bribe payers? Also, the pace of growth. If you're a high growth company, typically the controls tend to lag the growth because the focus is on getting the product or service out the door. The same thing with acquisitions. If you're a very acquisitive company, these tools can be used in a number of ways, and I'm going to get into that a little bit further on in the presentation. And lastly, compensation structure. Most of you are aware that compensation drives behavior, and once you understand how people get compensated, you can use these tools to focus on the opportunity individuals have to drive compensation, whether that's driving bonuses, whether that's driving the value of their options or their restricted stock. Before I turn it over, I just want to talk, I've got a couple more slides, excuse me. This is a critical issue in terms of the context for the entire presentation. When you talk about fraud, you have to keep in mind that fraud typically starts out small. And this is where someone is sticking their toe in the water and seeing if anyone's watching or asking questions. So it could be as simple as setting a reserve at 2% when it should be set at 3%. And no one questions it. It has an impact on the bottom line. Or it could be that someone is paying a ghost vendor, and they start out slowly. And it typically increases in complexity and its aggressiveness over time. And as a result, this is really where you want to find it before it reaches this next level. It often grows in magnitude and number of participants, and it doesn't stop. People don't wake up one day and say, you know what, I've committed enough fraud, I'm going to stop. It will keep on going. So these tools help you find these frauds early on in their infancy. So with regard to data analytics and visualization, what we're talking about is first you've got to acquire and normalize relevant data. And again, depending if you are a very acquisitive company, you may have lots of different legacy systems. This can sometimes be a challenge. And then you're going to analyze that company using the type of analytics we're going to talk about in light of the perceived risks based upon your risk assessment. And what you're looking for, you're really looking for needles in haystacks. And we call these potentially anomalous transactions, or PATs. And these are transactions that hide in plain sight. They are well papered, they've got the right signatures, they look legitimate, but they are fraudulent. And when we talk about using this type of big data, we're talking about really not looking into the future to predict who might commit fraud down the road, but identifying what's happened in the recent past or what's going on right now. And the last thing before I hand it off is that the data analytics process is very well suited to the type of visualization packages that are on the market and that we're going to talk about. And it's critical that in this whole process that the internal resources of the company are utilized in an efficient fashion. So I'm going to flip it over to Stephanie at this point, and I'll be back a little bit later on in the program. Stephanie?
Thanks, Jeff. Appreciate that. That was a great foundation. And as you mentioned, what we'd like to talk about now is a bit of the process from a data analytics perspective. And what I'd like to do is talk briefly about the process and then hand it over to Michelle to talk a bit about some different data sets, how we use data, and then we'll come back and show you some examples from a visualization perspective. So let's talk briefly about the data analytics process, what it actually means. So first off, as Jeff mentioned, you need to acquire the data, and sometimes there can be a big challenge with acquisition because of the fact that you have many different systems, many different sources of information, and as Jeff mentioned, if you're an acquisitive company, that could add just additional complexity. So the acquisition and the recording of the information can be quite a challenge as it relates to the data analytics process. Once you get all the information, that raw information is compiled, you then have to go and extract it, reformat it to include the required information. So clean it up, make sure the data and the analyses that you run off of that data is really only as good as the data itself. And so everyone has heard, I'm sure, garbage in, garbage out. It's very, very relevant and appropriate. And so you want to make sure in this extraction cleansing phase that you really understand what information is going into your analytics and you cleanse it appropriately. You then want to integrate and aggregate the different data sources so that they're all expressed in one compatible format so that you can then build from that. So you've laid your foundation by acquiring, cleaning, integrating your data, and now you get to the part where it's kind of fun, the analysis component and modeling. And that's how you determine what trends you may see, what types of information and analytics you want to run, and then, of course, interpreting that. And the analysis and the interpretation, I think, is extremely important to stress here because some people think of visualization and analytics as a technology. And you use technology, but the truth is you need people. You need human interaction. And if you don't have the application of an individual's understanding of a business and corporation's culture and so on, you are going to have a disconnect between your analytics and your results and the usefulness of what you've done. So it's very important to analyze the data and interpret it appropriately with the appropriate individuals. Typically, we use visualization for purposes of interpretation. And in talking a little bit later, I'm going to show you some examples of the visualization and also give you some statistics about why visualization is so important. So I'll hand it over to Michelle to talk a little bit about data and how we use it, and then we'll come back and show you some examples of visualization.
Thank you, Stephanie. I appreciate that. When we start to talk about fraud and fraud detection, we can't forget that from a compliance perspective, we have to look at the training, your policies, your hotline and incident reporting as part of that overall data set. And I feel like in the compliance world, we can never have enough data. It helps us drive our prioritization prioritization. It discusses accountability, and we really need to find ways to make sure that the data that we are collecting does not fall through the cracks. So we can put processes in place that allow for the collection of data, but keep in mind that once you collect it, then you have a responsibility to the data to not only to analyze it, to determine how your compliance program is functioning, but then respond. So responding to people who are bringing information to you in a timely manner. I think given the initial comments is that there isn't really any shortage of headlines that tell us why we need the data, right? I mean, there are drivers to it from external sources, from internal sources, but even if you think about things like your shareholders and your board of directors, even if you look at from a risk management perspective, and even buying insurance for those folks, there are certain things that your plans have to have and need to demonstrate accountability there too. So your board of directors has an interest here, and we have Department of Justice here, but you could really insert a number of organizations inside the federal government that would look at this for you to prove not only that you're detecting issues before they arise, but that you're addressing them as well. And then as we were discussing, doing more with less, that centralized visibility into what your data is telling you from a prioritization perspective allows you to utilize the resources that you have most efficiently. So now in our world at the network, we talk to a lot of clients on a daily basis, and the questions start simple enough. We say, what does your compliance program look like? And often our clients respond with a list of activities. Well, we're doing this, and some are hotlines, some are tracking incidents, some are doing policy certification, some are doing training. And all of those things that they're doing, really have their own analytics and data that is being captured as part of that process. But what we find is that a lot of those structures are walled off from one another. So some of it may reside in HR, some of it may reside in internal audit. And so it makes that sort of look at a cohesive program a bit more hard to do. Because then with each of those walled off entities, there's different people with different systems that are doing things there that would be beneficial across the board if we knew, but in some cases are very siloed. So when an organization sees compliance this way, it makes it a difficult task to gather that data and then to provide visibility to all of the other elements so that they're learning from what's happening within those other areas. So on a practical level, that approach is really ineffective. And so, sorry about that. And so what we're trying to do is sort of help our clients look at how centralized visibility is really critical. So we're looking at things like policy lifecycle management, your education process, how you're detecting incidents, how you're managing the investigations for those incidents, and then whatever corrective action that you happen to be putting in place to prevent that from going forward. Sorry. So what does that tell you then in terms of the relationships and the information that you're getting? And you'll see here that from a visualization perspective, what we can do is we can look and say, let's take anti-bribery for example. We look at the policy certifications that are done for a specific group. We then look at the number of people trained and the percent of folks trained inside of that. Any incidents that may have been detected as part of that process, and then an overall assessment. And quickly, as you can see, if you look at the West Division, they have a very high number of incidents, but it's also the same place where their number of folks who are certifying on their policies and the number of people who are completing training are very low. So if you're going to look at the data and what the data is telling you, that's where you would start from a prioritization perspective of where to go and start to detect what the issues may be. Without collecting the data, without the analytics that Stephanie was talking about, this may not be apparent to you until something happens, that raises the eyebrow of the government in such a way that you have to respond to it. So getting that information, being able to get the analytics, and be able to explain it to those who within the business that you would have to get from a champion perspective to help you as the visualization can go far there. And I think what you have to understand, and I think from a business perspective sometimes it's difficult to understand, is that all of these pieces are interconnected. And so if you look at the graphic that we have here and all of these pieces that are here, they're all connected to one another in some way. And so you have data that you're collecting that sort of seems like it's in a silo, but finding ways and other alternatives to collecting additional information, from that which you should be using, looking at exit interviews and things that may not be from a compliance perspective in your purview, but maybe exist in HR or exist in internal audit, and some communications to leaders going back to what Jeff was saying earlier about the reporting direct to the CEO and to the board and getting that information as part of your data set and analyzing that with everything else. And that will help you sort of drive to the culture that you're trying to put together in place so that you know that the information that you're collecting, the analytics that you're doing are all supported by the business. So we talk at clients then about sort of the holistic approach, right? It's not a matter of just sort of defining the data that you're going to collect and understanding that you're going to have policies that go along with that. You're going to have education and communications. But there's that whole piece from a detection perspective of, back to what Jeff was saying, assessing the risk and really matching what the risk is to the data that you're collecting to make sure that you're able to produce information and analytics that help you understand whether or not you're mitigating that risk appropriately. There are employee surveys, driving a speak-up culture that can help in that data collection piece as well. But it really is about understanding what your management and board want in terms of your program and those areas of risk that you need to mitigate and data that can help you put together a prioritization program with the limited resources that you have. And with that, I guess I'll turn it back over to Stephanie.
Thanks, Michelle. That was extremely helpful, and I think it goes very nicely into our next slide, which obviously is why we put it next, because we could talk a bit about the challenges that are associated when you're collecting all of this data. And Jeff used the phrase earlier, big data. There's the concept of the 4 V's of big data, which many of you may have heard. Sometimes people actually even call it 5. They add 1 to it. But the 4 V's are referring to the variety of data that you get, the velocity, the speed at which you're receiving that information, the volume of information, which is off the charts these days, and the veracity of the information. And when you take all of that, that's really part of your foundation of the challenges, right? It's the data is being generated so quickly. It's coming from so many different places. There's a whole host of different types of information you need to look at, and you need to make sure the data you're looking at is good. It has quality. And so that's sort of the foundation issues as it relates to big data in general. And as it relates to some of the challenges from an internal controls and fraud analytics perspective, you talk about the heterogeneity, as I mentioned here, especially when you're dealing with legacy systems or different types of systems when you're combining organizations. The scale of the data, how much information you're talking about, the timeliness of the data, and that is both when you get the data and what time period it relates to. The privacy component, which is a big issue these days. We started off talking about some of the fraud trends and all of the headlines that you see, from the government and the investigations, and those all don't just reside here in the United States. And so when you're dealing with organizations that are across the globe, you have to be careful about what type of information you can and cannot get and how you transport that information. So privacy is a big issue. And lastly, as we mentioned before, human collaboration is really a strong component of how effective your internal control analytics are going to be as it relates to the whole host of information that you can be processing and analyzing. We have a phrase that we've used many times when it comes to data analytics, and it's called analysis paralysis. Oftentimes people just want to keep running analyses instead of actually stopping and interpreting them. So that human collaboration part is very, very important because you don't have to run hundreds or thousands of analytics. You have to be able to focus on your risk, like Jeff talked about, and then identify the appropriate analytics to run. So let's talk a little bit then about some of these analytics that we can run that can be helpful. And first, I mentioned before we get into some of these, I thought it would be very helpful to talk about the benefits of visual analytics. We have all been recipients of an Excel spreadsheet with 200 lines or 20,000 lines, and you spend a couple of seconds hitting the page down button, and then you either draw a conclusion, which may or may not be reasonable based on the lines that you've reviewed, or you almost deem it useless because who's going to go through all those rows in Excel? And sometimes we can now use some pretty basic graphs. Excel has some decent graph functions, but the truth is that you really need a robust visualization process in order to interpret the information that you're getting. Some interesting statistics in terms of the benefits of visualization. First of all, 40% of people respond better to visual information than plain text. 46% of people say a website's design is the #1 criteria for discerning the credibility of a company. Publishers who use infographics grow in traffic an average of 12% more over those who do not. Posts with video attracts 3 times more inbound links than plain text posts. Visual content drives engagement. For example, in just 1 month after the introduction of Facebook Timeline for brands, they saw a 65% increase in engagement when they're using the timeline feature. 90% of information transmitted to the brain is visual, and visuals are processed over 60,000 times faster than text. You get your answer much more quickly. So these are just some high-level statistics for why we want to use visualization to hopefully really stress the fact here that it's not only just the analysis, it is the way the analysis is presented. So if you go back here, we're talking about a link analysis as an example. And one of the things that's important, to go back to Michelle's point, is you don't just use transactional data. You can use unstructured and structured data. And here's an example of where you can take people's emails and see who's talking to who and whether or not that's important for you depending on what areas you're looking into. And so you could use this as an example for looking to see whether or not your payables folks are talking to vendors. If there's apparently or seems to be a potential breakdown in controls, you can do an analysis like you see here. And you could look at email after email after email, or you could look at this chart and see you have 2 main players, and it looks like you might have a couple of small players as well in the orange and blue, in the orange circles with the blue shirts. So link analysis is one method where you can take unstructured data like email and you'd be able to analyze it. You could use structured data as well if you wanted to use phone records or things like that. That's very, very helpful. Another important area is geography. And there's a lot of mapping that we use for purposes of our analytics. So this is an example, is a map. You can see that there are pink areas, and this was done by zip code. You could do it by state, by country, whatever regions you're interested in, but we did this by zip code. The pink versus the red reflected, for our purposes, where certain we were doing a healthcare investigation, and we wanted to see where certain healthcare places were located, and the zip codes of the people that they were serving and so on. So we were able to plot on the graph by zip code certain things that had one characteristic as pink and certain things that had another characteristic as red. Now, in and of itself, that's usually pretty useful, to be quite honest. But the beauty of these types of visualization is you actually have the ability to overlay additional information. So not only do you have one variable here, but within the pink, you're able to see there are some lines on there that hopefully you folks can see that are leading towards circles, some of which are blue and some of which are orange, which are a secondary characteristic about that zip code, which was another indicator for us of something of interest. So one of the biggest issues and challenges I think we find with data analytics is there's so much information, and if you just run your generic fraud analytics, how are you ever going to glean anything significant, like Jeff mentioned, you're looking for that needle in the haystack. When you are able to layer your analytics, like you see here, where you're placing geography and then another characteristic on top of geography, so that we can say if the pink zip codes are of interest, and within the pink, if you have blue circles, that's of interest, then all of a sudden you know that that zip code in particular is where you want to hone. So these types of geography maps are very, very helpful. You can look for transactions that are taking place in different regions, states, cities. You can look for payables and receivables, just like you have here, two variables in essence on a map. And you can also look internationally, and you can understand what kind of transactions are happening in different parts of the world, and you can visually reflect the number of those transactions by bigger and smaller dots and all of these types of things that help you get to your answer quicker and not have you overloaded with either having to put together multiple different visuals or having to sift through records, lines and lines and hundreds of thousands of lines that you really wouldn't find anything, and you put it on a graph, you find it in just a quick minute. Another example here that's probably near and dear to many of our hearts has to do with journal entries. And so we were looking here at entries without descriptions. And what happened was you can see that right there in sort of the middle of this time period that there seems to have been some sort of change. Because what happened is prior to the line, you see that there were a relatively speaking consistent number of entries without descriptions. And for several years, it was from, this graph represents on the left side from 2009 to sometime in 2011. Then all of a sudden you see very quickly that it went haywire and something happens. Now that could be an issue in terms of a potential fraud or potential risk, or that could be a breakdown in your controls or a breakdown in training. And so maybe you got a new person in your department and they didn't realize that they had to enter your descriptions. Or maybe there was a problem with how they were trained, and so this simply wasn't addressed. And if you run these types of analytics frequently, you're able to catch that sooner rather than later. If it's a training issue, then you course correct and you go back to what you would see as quote normal in your pre-2011 period. And if it's not a training issue and it is a potential fraud, then you have the information, again, pretty quickly to go and investigate that. So, these are just some samples of some journal entry queries that can be visualized. This is just one example in particular. Journal entries, there is an abundance of analytics that can be run, limits of authority, unusual authorization, authorization and initiator being the same, some time of day analytics, different types of accounts that get credits, so where that's atypical, for example, a credit to an asset account like cash. It's the concept here is to apply visual analytics to journal entry testing depending on where you see the highest risk areas are. So with that said, after some of our examples here, I'm going to turn this over to Jeff to talk a little bit more about some samples and some substance here on analytics.
Thank you, Stephanie. That was very informative.
My pleasure.
So I'd like to go through some examples to show you how this really gets applied, and these are some real-life examples. We've changed some of the facts, but these come from some investigations we've worked on. So, listen, there's lots of different types of frauds that get perpetrated, and for purposes of our example, we're going to talk about, theft via conflicted purchases. And this really manifests itself in several ways, but it's typically associated with an employee inside the company who has an undisclosed interest in a vendor outside the company or a customer or something where that relationship is unknown. And when that's present, you have several risks. Number one, that employee can negotiate a higher price than normal with that supplier, vendor. and of course, that hurts the company, and that's, so typically associated with something like a kickback scheme. There's opportunities for bid rigging, if there's a competitive bidding issue, and of course, that employee's relationship with that outside company gets the information necessary to win the bid. Off-grade product disguised as full grade. I mean, this happens a lot in overseas markets, particularly in Asia. And then, of course, what we're most familiar with is the phantom vendor, where a vendor is submitting invoices for goods or services that the company is not receiving. And for purposes of the example that we're going to go through, we're going to focus on this phantom vendor. So in looking for these potentially anomalous transactions, you have a number of different types of analytical tests. And these are what you are baking into your analytics programs. So you're looking at issues of stratification. Here you're looking for example, payments that bump up against, signature authorities or purchase authorities. You're looking for gaps in the data or duplicates in the data. I'm not going to go through all these, but aging is a critical issue because a lot of what these analytics are based upon are changes over time. You're looking for changes that really shouldn't be there or that are anomalous. Ratio analysis, frequency analysis. When we talk about frequency, we talk about changes in the frequency of payments. So payments that may be speeding up to a particular vendor, or when compared to a prior population of vendors, trends or missing data. You may be looking at the vendor master files. If someone is making up a ghost vendor, they may not fill out every field in the vendor master. So we're not only looking for what's in the data, but sometimes what's missing from data that should be there as an indicator. And for the purposes of the example that we're going to go through, we're going to focus on aging, frequency, and trends. So what we're looking at here is for a particular vendor payment attribute analysis. Along the left axis, we're looking at the gap in time between the invoice date and the payment date. So an invoice comes in, it's dated, today is the 14th of May, and when does that invoice get paid? How many days is that gap? And along the bottom axis, we're going to plot time. And so we had a situation where a large construction company was building a power plant down in South America, and they were hiring security contractors to make sure that their people were protected and their their materials were protected. So they go through the normal vendor approval process, and when you start looking at the payment attributes associated with these particular vendors, this is what we see. So over the period of about a year, you can see that the payments to these particular vendors are falling between roughly 40 and 58 days, averaging about 52 days. And when we looked at what was normal for this company, that was pretty much what was normal within their company. And of course, what's normal will differ from company to company. So then an event happens. A new vendor gets added into this particular vendor class. And what we see here is this is where the toe is getting stuck in the water. Here you can see that we're comparing the payments to this new vendor to what was paid in this vendor class historically, and you can see that the gap between payment date and invoice date is starting to shrink. Now, using data analytics, this fraud would have been caught at this point, but it wasn't, and what happens is that the fraud continues, And as you can see, the frequency starts to pick up rather considerably. The gap continues to shrink. And this is a pretty typical pattern for an embezzlement scheme. But this was more than just an embezzlement scheme. This was an FCPA-related matter. So what you see, what we see here in this dotted red box are all of the books and records violations and all of the funds that continue to flow out of the company that should have been stopped had the company been using the type of data analytics that we're talking about today. So again, as we talked about really at the outset of the program, the issue of early detection is critical. And when you talk about FCPA exposure, every book and record violation has a penalty associated with it. So these things do not get better as they go on. In fact, the liability exposure for the company grows. It's like a meter ticking with the fines accumulating. So again, early detection is the key, and I'll tell you how we went about finding this. And this also goes to the issue of false positives, which I know a lot of people are concerned about when they talk about data analytics. So we started with what we considered to be the relevant data set, which were the vendor masters, which were the disbursement files, and some journal entries. And then we start running our tests, and what we find is that for a certain group of vendors, we find a set of frequency anomalies. Now, in and of themselves, frequency anomalies may not be problematic. So again, if you're just looking at one issue, this is where false positives can really creep into play. But then we also overlaid inconsistencies in some of the vendor data. And it was some of the issues I talked about earlier. You had some missing data in some of the key fields. Data fields that should have been alpha and numeric were only numeric, so the person who made up the vendor really failed to consider what that data in that field needed to look like and got sloppy. And we also looked at invoice anomalies. And invoice anomalies really run the gamut, but they include things like consecutive numbered invoices, and this was in a particular country where there needed to be certain tax information at the bottom of the invoice, and it was missing. So it's really where all of these tests intersect. And we ran a lot more than just 3, but for purposes of illustration, it would have gotten too messy on the screen. But you can see it's in the center where this is where the high-value targets really show themselves. And these are the transactions that then people need to follow up with and you need to put human hands on. So this is how you effectively deal with false positives so that you're not chasing you're not chasing your tail. I want to wrap up briefly with a discussion of continuous monitoring. So continuous monitoring really is taking data mining software, and this can be database programs like Access or Oracle or SQL or IDEA ACL, and you're marrying that with established forensic protocols and really well-tested investigative methods. And what you wind up with is either real-time, depending upon how continuous your monitoring is, or near real-time detection of not just fraud, but could be inefficiencies in purchasing. You're finding these potentially anomalous transactions, these high-risk relationships, failures in the compliance environment, and circumvention of controls. And there are a lot of benefits to continuous monitoring. Number one, it's an excellent way to look at your risk in an objective fashion. So, for example, a lot of companies that operate internationally have limited resources to cover all of their locations. So you can, as opposed to doing some type of cyclical approach to visiting your locations, you can use this type of monitoring as the canary in the coal mine, if you will, for identifying the areas that really have the most noise coming out of them. We talked a little bit about some of these. I'll just touch on a couple more. It can help evaluate how good your training is. It can absolutely be a great tool to assess compliance with books and records, and it can monitor compliance and ongoing risk in newly acquired businesses. If you're an acquisitive company, there's a period of time between when you acquire that company, when you integrate it into your ERP system, if that's the plan, and you can use these tools in the interim to sort of make sure that things are as you believe them to be. Timeliness is obviously a critical issue. Evaluating the efficacy of the control environment, and improving the qualitative nature of the data being captured. When you go through this process, what you'll find is you're going to identify certain types of data that you're not currently capturing that you should be, that will be very helpful in terms of investigating any problems. And I'll give you an example. It could be that within your HR system, you're not capturing prior employment information, so that if you identify a particular person within the organization through that link analysis that Stephanie was talking about, through the monitoring of emails, you say, wow, here's someone within the company that this person is communicating with. I wonder if they worked together at a prior employer. Now, if you could quickly identify that, you would know that yes, they did, or no, they didn't. If they did, you might investigate that further to say, well, this may be the type of collusion that we're looking for. So those are all of the prepared comments that we have today. We're going to now open it up for questions and answers. And thank you very much for your time and attention.
Thank you all. That was very informative. Again, that was Michelle Nichols, Senior Program Consultant at The Network, Stephanie Giamotto, Consulting Partner at BDO, and Jeff Hartnett, Consulting Managing Director at BDO. If you'd like a copy of the slides just presented, you can download it from the drop-down menu on the bottom left-hand side of your screen. So let's move into the Q&A part of our session, and I'm going to throw these questions out to you in no particular order. One question that came in from an audience member asked, can you explain the relation between internal controls and the compliance department? I guess, Michelle, would you be able to answer that question?
Yeah, I think that, the controls that Jeff and Stephanie were talking about, and why you would use those, some of the times can be driven by calls to your hotline, right? So this is where I think the groups within the organization have to understand the data that's being collected, the tools that are available for that collection from a detection perspective. So to the extent that you're getting lots of questions about conflicts of interest, that may be a time where you could employ tools like this in terms of looking at some anomalies from requesting conflicts. Certainly anything that comes to the hotline that's not even substantiated, but a potential for a violation, or even going back to the example of the compliance data, if you see that you have one of your divisions is not taking their training and not certifying on their policy, that might give you a reason to sort of take a look and employ some of these tools to see if there's something going on there that your data has told you from a compliance perspective.
Great. Yes, thank you. And another question, what type of software allows you to prepare a link analysis?
So I can jump in there. This is Stephanie. There are a couple of different software tools that are out there. One of the ones that we use is i2. That's been very helpful. I think that's also used by some of law enforcement agencies as well. But that's probably the leader from my experience.
Great. And the final question is, how can we use these tools to reduce our liability associated with anti-corruption risk? And this goes out to the entire panel.
Yeah, let me take a stab at that first. You have two principal areas of liability in anti-corruption. You've got books and records exposure, and you've got, the anti-bribery provision, which leads to potential disgorgement of tainted gross profits. So in terms of books and records provisions, this is an excellent tool, or these are excellent tools, to monitor on a fairly regular basis whether you are accounting for transactions based upon their intent. And this is something that the government focuses on, because when it comes to investigating bribery, establishing that a bribe got paid is a difficult burden for the government to make. But establishing that you violated the books and records provision is pretty black and white. So that's why when you look at the fines that get handed down, the majority of the monetary fine is associated typically with books and records violations. So by employing these tools, you can make sure that your books and records are in compliance with the requirements as set forth by the SEC and DOJ.
Great, thank you, Jeff. And once again, since we're almost out of time, I'd like to thank the entire panel very much for a great session. Again, everyone, our speakers today were Michelle Nichol, Senior Program Consultant at The Network, Stephanie Giammarco, Consulting Partner at BDO, and Jeff Harpsmith, Consulting Managing Director at BDO. And a special thanks to BDO and The Network for making this webcast possible. This webcast has been recorded and will be available sometime in the next hour or so. CPE credit is now available to subscribers for archived webcasts. Please check out our on-demand CPE library under the Webcast tab at www.complianceweek.com. Once again, to obtain your CPE credit after the presentation, wait until I finish this wrap-up, and please disable your pop-up blockers in order to access the exam. The webcast will close automatically, and the final examination will be presented in a separate window. If you have trouble viewing the CPE test or receiving the CPE certificate, please send an email to info@complianceweek.com to request a copy. Again, that's info@complianceweek.com. If you enjoyed this presentation and would like to learn more about topics like the one you heard today, visit conference.complianceweek.com to learn more about our upcoming 2015 annual conference held next week in Washington, D.C. on May 18th to the 20th. This concludes our webcast. Thank you again for joining us, and goodbye.